one could argue that okay, this is very conservative. You're stifling innovation. On the other hand, what the RBI is saying is, okay, innovation, great, I will support you 100%, but I want protection and transparency as part of whatever innovation you do.
So, if you made it at all through COVID as a non-profit, it was partly because you were able to successfully move these transactions online. This is almost like I finally managed to get hold of an oxygen concentrator and then the power ran out. It's that kind of metaphor.
Now, as far as the RBI's rationale is concerned, I think there are four parts to this. Right? One is transparency. So every time an auto debit transaction is happening, right, whether it's 2,000 rupees or 5,000 rupees or more than 5,000 rupees, the customer is informed well in advance that this is going to happen. Make sure your money is in the account. Two, if you want to cancel it, you can cancel it. Right. So I think it's giving a lot more control to the customer, which is what everyone seems to agree on. So this is a good model. The second reason is security, right? Like a lot of payment frauds happen today because of what is called man in the middle attacks. So it's phishing. Right? Someone is sitting in between and saying, I'm auto debiting your account and whatnot. And it's a fake merchant, fake transaction. So this sort of prevents that because now the customer knows that this bank or this merchant is going to debit my account and I have a trail of these mandates and I have a control over these mandates. Third rationale is that if you look at how the payment system is designed in India, it's not disaggregated anymore. There are many layers to it, right? So you've got bankers, you've got network providers, which will be Visa, MasterCard, and the NPCI. The NPCI handles all auto debit transactions under what is called the National Automated Clearing House. You've got payment aggregators, payment gateways, and then you've got the merchant. So you've got about 4 layers of intermediaries that are facilitating an auto debit transaction. The idea is that between the merchant and the payment networks and the card networks, there is one consolidated mechanism to firstly create a mandate or debit the accounts and then always seek consent and provide that transparency. So RBI is basically saying that, okay, I want one model now. I don't care who you are, what merchant it is, whether it's a Netflix or a media company or a food company, whatever it is. I want one way that all of you all know that the consent has been given for every auto debit transaction. Now, the fourth one is what is unreported is that some banks, fintechs, NBFCs have tried to work around this NAC framework, right? So the whole point of NAC was that you get a complete customer consent form, which is either physical or digital, saying that you are authorized to debit my account X amount every month going forward for a certain term. Some banks lend NBFCs, insurance companies, mutual funds, primarily banks, but try to find a workaround from this by directly debiting the account of their customer. So if let's say a bank gave you an overdraft or a loan or whatnot, they would directly debit the account, right? I think RBI figured out that some of these banks were doing this rather than create a NAC mandate on top saying that even though you've given a loan, create a NAC mandate and then debit through that mandate. That wasn't being done because the bank owns your account, so it can do it. It's not illegal, it's not anywhere, it's just innovation. It makes it easier for the bank to do their job, to collect their money.
The anecdotal evidence suggests that donors are having huge amounts of difficulty maintaining their subscriptions or their memberships to NGOs. The difference, I think, between the for-profit sector on this and the non-profit sector on this is that when you make a purchase from a for-profit organization or even from a media organization, there is a tangible service or product that results from it. And when that service gets stopped, you're likely to do whatever it takes to reinstate it. With a charitable donation, on the other hand, there is no tangible product or service changing hands. And therefore, the impetus to renew that subscription or do whatever it takes to reinstate that subscription is commensurately lower. A factor to consider is because of the pandemic, other forms of retail fundraising have also been hit.
First two winners are Razorpay and BillDesk, because they've both jumped on it and they've created this module or this product where banks and merchants and payment aggregators can kind of manage all their mandates and creation of that. So they're the first two winners of this, that's for sure. And from a loser standpoint, I think smaller merchants, medium-sized merchants who don't have the wherewithal or the money or the user base to justify saying that get mine, enroll me now onto this thing. DTC companies that depend on subscriptions, a lot of coffee companies, food, clothing companies nowadays, B2C brands that are out there that depend on the subscription model on a monthly basis, they will definitely be affected. But I don't think customers lose out. You're going to face pain for 3 months. I think by January, everything should be fine. According to media reports, HDFC, ICICI, Kotak, and Bank of Baroda are ready for this. So they're going to gain from an acquirer and issuer standpoint. The losers will be again the smaller private sector banks that don't have the tech wherewithal to do this. See, it's all about skills, capacity, infrastructure. There's a lot of internal work.
Non-profits, more than for-profits, have less access to technology support. Someone set up a payment gateway for them once upon a time in a pro bono kind of effort, and they've been relying on that ever since. They don't have the wherewithal to make the modifications necessary. For many of these organizations, what we call retail fundraising or fundraising from the public is their only means of survival. And this, the recurring donation, is the most reliable form and the cheapest form of fundraising for those kinds of organizations. One of the few positive outcomes of COVID was the migration of large amounts of transactions online, right? So if you made it at all through COVID as a nonprofit, it was partly because you were able to successfully move these transactions online. And then just as you were able to do that, this is almost like I finally managed to get hold of an oxygen concentrator and then the power ran out. It's that kind of metaphor.